Hey, have you ever felt like the stock market is this exclusive club and you're just not on the list? Well, guess what? Today, you're getting the VIP pass. We're about to crack open one of the absolute best tools for anyone, and I mean anyone, just starting out. Let's do this.
Seriously, just think about that for a second. What if you could skip all the complicated research, all the guesswork, and just buy the entire stock market, like all of it, with one single click? It sounds kind of made up, right? Almost too good to be true.
And yeah, there's always a but, isn't there? The idea is super simple, but how it actually works, well, that's where most people get tripped up. And that confusion, it stops so many people from even starting. So today, we're going to smash through that wall, together.
Okay, before we go any further, we gotta do the quick legal thing. Look, think of this as us giving you a map and showing you how to read it. But we're not your personal tour guide, and this is definitely not financial advice. So please, always do your own research before you make any moves.
All right, so here's the game plan for the next few minutes. First, we're going to figure out what an ETF even is. Then, we'll get into the good stuff, the pros and the cons, and we'll wrap it all up with a simple, smart strategy you can actually use. Okay, let's dive in. What in the world is an ETF? Forget all that jargon you hear on the news. We're going to break it down with a super simple analogy. Trust me, you won't forget this one. So the fancy name is Exchange Traded Fund, ETF for short. Basically, it's just a bundle of different investments all packaged up into one. But what does that really mean? Well, let's imagine we're going grocery shopping.
Just picture it. You walk into this huge supermarket, but instead of food, the aisles are filled with stocks. You could spend your whole day going aisle by aisle, picking out one share of Apple, then one share of Microsoft. Or you could just grab a shopping basket at the front.
Now, this isn't just any old empty basket. This one is, well, it's kind of magical. It's already been filled for you with a tiny piece of hundreds of the biggest and best products in the whole store. And when you buy an ETF, you're not buying one item. Nope, you're buying the entire basket all at once. And the most popular basket out there is the S&P 500 ETF. You've probably heard of it. This thing holds a little slice of the 500 biggest US companies. So with just one purchase, boom, you instantly own a tiny piece of Apple, a bit of Microsoft, some Amazon, and like 497 others. That right there, that's what we call instant diversification.
And this super simple idea, it has been an absolute game changer for millions of regular people. So let's break down why these things have become so incredibly popular. And I'm not kidding when I say popular. We're talking about more than $10 trillion. That's a 10 with 12 zeros after it. $10 trillion are invested in ETFs around the world. Clearly, they're onto something, right?
So for anyone just starting out, ETFs are like a triple win. First, you get that diversification we talked about. If one company in your basket has a bad day, it's no big deal. Second, it's just lower risk. You're not putting all your eggs in one basket. You're buying the whole farm. And third, it's just simple. You don't have to worry about picking the next big winner. You just own the whole market.
Okay, let's talk about the potential returns, because that's what we're all here for, right? If you look back at history, a simple S&P 500 ETF has returned on average something like 8 to 10% per year. Now, compare that to your savings account, which is probably giving you what? 2, maybe 4% if you're lucky? That's not just a small gap. That's the difference between your money actually growing versus it pretty much just sitting still.
All right, but we've got to be honest here. Nothing in life is perfect, and that includes ETFs. If you're going to make a smart choice, you need to see the full picture, not just the shiny, happy parts. So let's flip the coin and talk about the downsides.
So here are the trade-offs. First, you're giving up the chance to hit a home run. You're not going to get those crazy 100x returns like some people did with NVIDIA because your gains get averaged out. Second, if the whole market takes a nosedive, guess what? Your ETF is going down with it. And third, let's be real, it can be kind of boring. This is the definition of a get-rich-slow plan, not a get-rich-quick scheme.
But you want to know the secret? That boring part, that's actually its superpower. Seriously. For building real long-term wealth, boring is exactly what you want. The fact that it's steady and predictable isn't a flaw, it's the entire point. That's the feature, not a bug.
So this really brings us to a major choice every single investor has to make. Are you going to try to be a stock-picking wizard? Or are you going to take the simpler path of just owning the whole market? Let's put these two side by side.
Think of it like this. Trying to pick individual stocks is like being a hunter. It's high risk, but if you succeed, the reward can be huge. But it takes a ton of skill and research. Buying ETFs, that's like being a farmer. It's lower risk, it's about stable growth, and you're just planting your seeds consistently and letting time do the work.
And you know, here's the hard truth that a lot of people don't want to hear. The data, going back decades, is super clear. Most people who try to pick stocks, even the super smart professionals on Wall Street, fail to beat the market average over the long run. It's a tough pill to swallow, but it's really, really important to understand.
Okay, so what do you do with all this information? How do you actually put this into practice? Let's lay out a super simple, super smart strategy you can use starting today. It really comes down to just 3 things. Pillar number 1, invest consistently. Even if it's a small amount, just automate it, set it and forget it. Pillar 2, use ETFs as your foundation. Before you even think about buying an individual stock, build a solid base with broad market ETFs. And Pillar 3, think long-term. We're talking decades here, not days. You have to give your money time to grow.
And I think this is the most powerful idea we've talked about. It completely changes the goal. You don't have to be a stock-picking genius. You don't have to search for that one tiny needle in a giant haystack. You can just buy the whole haystack. It's that simple.
So, that's it. That's your crash course on ETFs. And look, this isn't just a bunch of random information. For some of you, this could be a real turning point. The big question now is, what's your next move?
Hey, if this was helpful, if a little light bulb went off for you today, then do me a favor and hit that subscribe button, because our next explainer is going to be a big one. We're going to cover the #1 mistake that new investors make, and trust me, you're not going to want to miss it. Thanks so much for watching.